What's good, day traders? Welcome to day number 17 of the bootcamp. And today I want to talk to you guys about something that I just felt like in the markets, and it's to do with gold. Okay. And this is with every currency pair, it's not just going to be with this currency pair, but I do tend to feel like this every time we're in a trend, right? So every time price is going on an uptrend or downtrend, I have this type of psychology that I want you guys to work on, and it's called fear of missing out. And the problem with fear of missing out is that most of us enter the market way too early because we believe that the market is going to skyrocket high. Okay, let me show you guys Bitcoin, for example, right? Let me go on the daily time frame. Bitcoin is at around $94,000, right? And I'm guaranteeing you guys right now, a lot of people bought Bitcoin at this level. Do you know why? The reason why a lot of people bought at this level is because of fear of missing out. Hence why market became more volatile. Okay. When everyone is on the same trend, right? When everyone realizes that price is going up, everyone's buying and pumping this up, right? But then what happens is people tend to close their trades because they feel like market will just crash down, right? And in this case, market started to continue to go up. And what happens is it catches a lot of traders out. Now, the reason why I'm showing Bitcoin and as an example, and for example, gold as well, that I felt today, is because as a trader, you are going to feel like this many times, guys. You're going to feel like you are missing out on a move at the moment and you need to enter right now, or you're going to miss out on the biggest move in the world and you're going to never ever make that kind of money again, and so forth, right? But in reality, guys, okay, market can skyrocket high like this. But do you know what happens right after? What happens right after is price comes right back down. Okay, key example here is on gold. Okay, everyone in gold was like, oh, gold is going up, we need to buy, buy on the dip. What happened, right? Gold ended up skyrocketing high, right? And then what did it end up doing? It ended up crashing right back down of where it started, where everyone saw that breaker structure and that retest, right? It goes right back to where it began. Okay, now everyone that's buying here is going to see that true bullish move and potentially see a break to the upside. Okay, and so the reason why fear of missing out is so dangerous is because for those who bought here, for example, bought here, thinking that price is going to hit, let's say, for example, the 3,000 mark, right, has now hit the stop loss. On Bitcoin, same thing. People that bought here thinking, oh, we're going to hit 100K, right? Everyone was like, oh, it's going to hit 100K, hit 100K. And then they're like, they've got the worst, horrible position because they have to keep their stop loss super tight or here. And price can easily drop down to like here and then continue up. Price can do that. So the best tactic that I advise to traders and to you guys is every time you have this fear of missing out, leave the markets alone. Don't even bother. Because what's going to happen is you're going to feel like you have to enter now, and you're going to get this energy, and you're going to feel like it is time for me to enter, because if I don't enter, price is going to continue going up. And what's going to happen is you're going to enter at a silly price, and you end up having a stop loss at a silly price, and you end up going to have either a 1-to-1 risk to ratio or a really small risk to ratio where you're barely making profit, and prices most of the time going to hit your stop loss. Okay, markets are against you. The market does not want you to win. So if the market doesn't want you to win, every time it knows that price is going to accumulate like this, right? Every time it knows that price is going to be like this, right? What does it do? It makes the market choppy. It knows that the people are going to be either buying or selling here. Let's make it choppy. And then what it does, it breaks structure because people have either came out of the trade, number one, or they've entered the trade and they just got stopped out and price is going to go in your direction. A little story time, guys, especially when it comes to trading. I had a trade, right? And every time I used to place trades, it would be because of fear of missing out. And this is when I first started trading. And I always noticed that every time I entered the trade, at a moment where market is just crashing or pushing up like this, for example, I end up getting stopped out all the time. Okay. And I didn't actually notice this until I actually lost a lot of money. And I realized that fear of missing out is one of the reasons why a lot of people blow their account. And so, because of that, what I started to realize is that every time I place a trade and my stop loss is way bigger than I expected, and I can't actually handle this stop loss, I just don't trade it because I rather price go to the direction I want it, even though, price, for example, of gold, I'm expecting price to go up. I missed out the move today. And I'll explain to you, right? On the 1 hour time frame, I told myself I want price to come back down and go back up. Price is deciding to just continue to go up. That's completely fine. Yes, I felt like I might miss out on this move. Yes, I was scaling in, to see is there some sort of pullback. And there might be some sort of pullback. And I've got an alert ready for myself. But one thing I'm not going to do is I'm not going to enter at a really horrible price. And I saw price come here. Right, I saw price get to this point where we saw this big bullish push. Right, I came here. I was gonna enter right here, but do you know where my stop loss will be? Below here, because at the end of the day, I want the price to come to this area, meaning that my stop loss is already as big as I want it to. I don't want this stop loss to be that big. I refuse to do that. Hence why I am not going to trade this. So, key tips to managing fear or missing out. Number one is let price do its thing. Okay. Always let price do that push because 9 times out of 10, every time price comes back up or goes up, is going to come back down. It might not come back down fully, but it will come down for something called a retracement. Yesterday, you saw that, right? That price does retracement. If I just quickly, let's go on a currency pair, GBP. USD. I'm just going to show you something. Okay. Simple price action, right? If price is going up like this, right? What do we expect price to do next? We expect price to come back down, right? Now, sometimes price doesn't just come back down. Sometimes price will come and retest a certain level and then continue to the upside. What if I told you this, guys, right? And I told you guys, where's the best place to enter? A lot of you will say over here, which is kind of obvious, right? A lot of you will say over here. But should I tell you where you guys enter the market? Should I show you exactly where you enter? You guys enter the market at this level, right? Around this level where prices continue to go up. Why do you enter at this level? Because you think price is just going to continue going up. You think that price is just, it's going to go up and up and up to the point where you're going to make $1 million in the market and you're going to be rich. Guys, that's not what's going to happen. Like, honestly, I wish that could happen, but it doesn't happen. And therefore, you need to tap out of that false reality and focus on the price action, the simplicity of the market. If you guys want perfect entries, right, you need to wait for that retest. You need to wait for this so-called retracement. If you don't wait for this leg, what's going to happen is all of you guys that entered here are just going to get stopped out because you guys can't handle this deep drawdown. And every time price does a deep drawdown, just know that a lot of traders failed in this move. Okay, so if there's a deep drawdown, a lot of people are failing in the move. Let's look at gold, for example. Okay, gold, right? Gold did this push to the upside. Okay, and I'm actually going to scale this in. Look, watch this, right? Gold pushed to the upside like this. What did it start doing? It started to accumulate and consolidate. Okay, what was people doing? People thought, oh, going up, oh, we're going to buy here, right? Let's get in. You guys are buying here, right? Remember what I told you guys? You guys are buying at this level because you saw that break, you saw that retest. A lot of you are buying. What happened? Price knew that we're going to have a lot of traders that are fearing or missing out and they want price to get to this level, which is the mid level, right? Price, we all want price to get to this level. All of us want it to get to this level, right? But do we have the right entry to get to this level? No, because a lot of you are entering here, and what's happening is the reason why you're entering here is because of fear of missing out, and what happens is you get stopped out, okay? Then what happens when you get stopped out? You're like, oh, okay, fine. It's a downtrend now. You think that market is going down. What happens is you place that sell right? Let's say you place that sell like around here because you see that breaker structure, retest, place a sell here. You already messed up your trades, right? You messed it all up, yeah? All because you made a mistake or fear of missing out. Okay, in reality, and I'm going to show you guys, right, what I mean. Okay, so price has done this, comes down and goes up, right? I asked you guys a moment ago, I said, where would you enter in the market, right? And all of you must have said, obviously, over here, because price, created lows, created highs, and now we're just waiting for the retest, right? Of course. But no, when you look at price, you can see most traders bought here. That's why price went up a little bit, because most traders had that fear of missing out. And like I showed you in the example, a lot of traders are going to try and buy in this area, which is why there's always going to be some sort of consolidation when price breaks a level. Okay, price has broken a level, everyone's gonna be like break and retest. Well, reality is the deeper the retracement, that means a lot of traders placed a lot of buys here and they needed to get everyone stopped out. Okay, and then what happens? The real traders, the traders that have anticipated that yes, we are on this uptrend, we understand that price went up, down, up, down. This is another point of entry. A lot of traders are going to enter. Let's say they enter after this huge bullish candlestick, right? Stop loss below these lows, targeting all the way up here, giving us a nice 1 to 2.5 risk to ratio, right? Nice simple trade, right? But because you guys were scared, you would have lost out on this trade. But we thought that, oh, breaker structure, therefore market is going down. When in reality is we're going on uptrend. Why would market reverse, right? Why would market go down? Why do you believe that market is just going to crash down? And that's why it's so important for you guys to follow the trend, because of that, this psychology of fearing or missing out, because of this false reality you guys have given yourself that you're going, when price goes up is going to continue to go up, right? Because of that, you are going to lose in this market. Now, I could easily enter here, guys. Easily. Price has gone up. Easily entered here. But why would I not enter here? Because that's the highest point. Why would I enter at the highest point? Right? Surely I should wait for price to come down, retest this level, and then we will continue to go up. If price decides to just continue to go up, completely fine. I don't mind. I don't care. Because at the end of the day, I'm not losing anything. And at the end of the day, I didn't enter at a terrible price. So therefore, I am not going to place that trade. I'm going to wait for price to come down and then I'm going to continue. And just because price is going down does not mean it's a change of direction. For example, here, just because price is going down does not mean that price is crashing down. Okay, so what I need to put this onto you guys is, number one, don't fall for fear of missing out. If you feel like you're missing out on something, just leave the markets alone, let the move happen, and get on with another trade. Look at another currency pair. Just don't focus on that trade, because you're going to have a false entry, you're going to force the move, and you're going to end up hitting stop loss. Number two is, if you see price going on an uptrend, please, guys, do not go and try and do that counter trend, right? Please. And the only time you can hop on a counter trend, right, is if price goes down like this, retest, breaks another level. That's when we say, okay, we're going to wait for price to come back to here, and then we're going to sell here. Why? Because we have built new structure. There's no way I'm entering a sell here, because price could easily come back down here and push all the way back up again. There's no way I'm entering the market on a easy counter trend trade, because I'm not going to make money, because the market can easily just go in the opposite direction, making me lose a lot of money. Guys, we do not want to lose money, so please follow the trend and stop trying to do something out of the ordinary because you feel like I am going to catch this, right? Everyone that trades Bitcoin at the moment, right, are all feeling the same feeling, that fear of missing out, right? Everyone knows that price is going to hit the 100K mark, but I guarantee you price is not going to hit the 100K mark. Price is going to get near to that mark and then drop down and then hit the 100K mark. Why? Because everyone's going to have that fear of missing out. Everyone's going to have that psychology, that mindset of, oh, price is hitting here, we need to keep buying, but it needs to stop the traders out. Okay, likewise over here, price easily got up to 93,000, right? What happened? Price came right back down, right? Getting people scared. Oh, counter trend, counter trend. We need to sell now, sell Bitcoin, sell Bitcoin. What happens? Price continues to go to the upwards. Why would you sell Bitcoin if price has just made one of the biggest, largest moves in the world, right? You would never sell Bitcoin. Everyone thinks that Bitcoin is just going to randomly crash down to the downside, right? Randomly just do this and go down. Why would that happen? Like, realistically, guys, why would that happen? Okay. Likewise with gold. Yes, we saw some sort of downwards push, right? Okay, cool. I still don't believe this is a downtrend, and neither should you. Why should it be a downtrend? The only way it can become a downtrend is if price does this, comes down. Okay, cool. We had market structure like this, right? Market structure like this. The only way we can call it a downtrend is if price breaks this new level, this new low. That's the only time we can call this a downtrend. Because why? Because then price has easily called highs, lows, new highs, lower highs, okay? Lower lows, new lower highs, lower lows. That's the confirmation. Then we would say, okay, cool. We're in a downtrend. Let's wait for this retest, and then we will go for our short positions, right? But at the moment, why would we go for our short positions right now? I know a group of people are looking at gold saying, oh, gold is going to continue to go down. We should be selling. Well, guess what? On the 4 hour, we already built new structure. We already built bullish structure. We already broke structure here. We have just had a break of structure retest. Price is definitely going up. And as simple as that, guys, okay? So, guys, when it comes to fear of missing out, please don't fall for that in the markets. Please just be patient. Don't place trades because you see a push to the market. Wait for that pullback. Wait for price to come back down a little. Get a entry at a cheaper price. You will not enter the market at an expensive price, okay? Please don't do that. So on that note, guys, that is pretty much it when it comes to fear of missing out. Guys, this is a mindset video. This is something that you need to replay it multiple times because I know a lot of you are going to feel this video a lot. I'm going to be talking a lot of psychology in this bootcamp video. So please make sure that, this bootcamp. So please make sure you stay tuned for that. Guys, we are in I think it's day 17 now, so we're doing really, really well. Make sure if you have any questions, comment it down below. Make sure you like this video and share this to every single trader that you know. Share this to every single person that you know that wants to learn trading, because it's going to help the algorithm. It's going to help me know that you guys are interested in this, and I'm going to keep producing videos. The comment section are going crazy. You guys are doing really, really well. I really appreciate it. The Discord server is improving every single day. We're getting good show outs, and if you guys need extra help or need extra you want to see my trades or you want to see what I talk about, everything's on my Discord server and my Instagram, so make sure you go check them out as well. And I'll see you guys tomorrow, guys. See you later, guys.